Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News show. And today I've got an exciting subject. I'm a contrarian in the mining sector. And I think I've found what I consider the best contrary play in the mining sector, and that's what I named the title of this presentation. And the mineral that I think is the most undervalued, underappreciated when it comes to the companies in this sector is diamonds. And why I say that is usually when you're looking at contrary plays in the mining sector, the underlying price of that commodity is usually in decline. And you're awaiting a turnaround in the price of that commodity. In the case of diamonds are right now trading at their all-time highs. Yet the diamond mining companies or the diamond exploration companies are trading at huge discounts. In fact, there's not a lot of them out there, and that's what I've been on the hunt for. Diamond companies for a few years now, because I believe that we're in a long-term price trend on supply and demand that's going to take diamonds much higher. And therefore, if you find a new diamond mine, you can expect to see very good profits on that diamond mine. And why I'm getting back into the diamond sector, I spent a lot of my career in diamonds, diamond exploration specifically. Back in the 2000s, I used to have a report that was specifically just covering Canadian diamond explorers. At that point in time, there was hundreds, over 100 of them. Now they're down to about a handful. And this is really surprising because due to the price of diamonds. Usually when you get a commodity trading at all-time highs, there's a lot of companies that are out there exploring for that commodity. And that's just not happening now, which goes back to the supply and demand equation. On the supply side, there really hasn't been enough exploration over the last couple decades. And at the same time, demand is still very strong. Some were thinking that lab-grown or man-made diamonds would compete with natural diamonds, but that really is not the case. In the retail market, you can generally look at about 4 or 5 times the value of a man-made diamond compared to a natural diamond. People still want the real thing. They want the natural stone that comes from the depths of the earth, makes its way up from the upper mantle into the crust, and where you can mine it. A lot of the current diamond mines are aging, and that's why even though you have high prices for diamonds, the diamond production is on decline. And looking at the projects in the pipeline of development and the current mines, that decline will continue. Most of the diamond mines are very old now. They're running at the end of their lives. We've even seen it with the Argyle diamond mine in Australia that produced a significant amount of the fancy stones, the pink diamonds, is no longer in production. And what got me excited about diamonds again is a company that I invited, and they were gracious enough to join my show sponsorship, is a company called Arctic Star Exploration. And what Arctic Star is doing is they are in the Slave Craton, which is an old package of rocks in Canada, where the first and second diamond mine was found, the Ekati and the Diavik diamond mines, which have produced billions of dollars of diamonds for Canada. And they really burst onto the scene in 1990s and have been mining for many years now. and producing billions of dollars worth of diamonds. And Arctic Star has the project that's right beside the Ekati ground where the Ekati diamond mine was found. They have a big package of claims there, 48,000 hectares. And they've been having some excellent success, but nobody's paying attention. And there again, not only is the commodity under love, but then you look at companies that are involved in it. There's not too many, and Arctic Star is one of them. Now, Pat Powers, who runs the company, has basically been in the diamond exploration business since it started back in the 1990s when the Ekati diamond mine was found. And Buddy Doyle, who's his right-hand man, VP Exploration, they're a great team together. He was instrumental in the team that found the Diavik diamond mine and many of the kimberlite pipes. Kimberlite is the rock that hosts the volcanic rock that hosts diamonds. And he found a bunch of them at the Diavik project. So they've got two very experienced people who have dogged determination. And I really applaud their effort, because while everybody in the diamond exploration business had kind of backed away from the industry, these guys have kept at it for over a couple decades. And that takes a lot of fortitude and sometimes stubbornness, but that's the nature of diamond exploration. I mean, before it all started, Chuck Fipke was scouring the Northwest Territories looking for diamond indicator minerals that ultimately led him to the Ekati diamond mine. But, before he made that discovery, there was no diamonds in Canada. Yet we had the same age of rocks in these Archean cratons, like in Slave and in South Africa. And this cape kept Chuck Fipke doggedly determined until he found the Ekati diamond mine. And what I think why investors are not that following it very closely these days is because diamonds are hard to find. They're very small and they're not easy to find. And it takes a lot of serious science in order to find diamond mines. For example, if you look at Lucara's diamond mine in Botswana, that diamond mine was previously owned by De Beers, that project, and they had walked away from it. And as legend goes, John Armstrong, who I know very well for many years in the diamond exploration business, really brilliant guy, he was looking at the diamond indicator minerals and the diamond distribution curve, and they suggested to him that Caraway diamond mine should have big diamonds in it. And in fact, when touring the property, he went and looked at the tailings and found a very large diamond in the tailings. So it told him that not only was his assumption correct, that based on the science of diamond indicator minerals and diamond distribution curves, that there should be big diamonds there. And part of the reason that it was determined that they were not capturing those large stones is they were probably getting broken in the processing method. And so they changed the crushing and they changed some other aspects of the recovery, started recovering extremely large diamonds worth several million. In fact, they found the second largest diamond ever found, other than first was the Cullinan diamond, and second was their big stone that they found at the Caraway diamond mine. So I mentioned this because there's a lot of hallmarks to what the guys at Arctic Star are doing. They went back to the area where the diamond exploration and mining started in Canada, in the Slave Craton near Ekati and Diavik, on a project that was previously owned by De Beers that they walked away from. And they started looking at it differently. They looked at the geophysics with a new, fresh set of eyes, and then they did more work on the diamond indicator minerals and the diamond distribution curves, and they found a couple of very interesting kimberlites on their property. One is called Sequoia, and Sequoia has a very exciting diamond distribution curve. Now, this curve is based on a small sample, but it is suggesting that they could have very large, very high grade in carats per ton with a high valuation. The reason that it looks like they could have a high valuation is because they have some diamond indicator minerals that are quite unique. This is a subject that's very near and dear to me because I was with my mentor in geochemistry. We co-wrote a paper back in the 2004 that was peer-reviewed and published in a couple of very important publications. What we talked about was unique diamond indicator minerals. And what we found, and from talking to other experts in the industry, was that you know, when the first pass went through the Slave Craton, there was a specific kind of indicator mineral that was being looked for. It is called a G10 garnet, and it would be high chrome and subcalcic, so low calcium and high chrome. But you look at some of the other diamond mines throughout the world, and they're void of any G10 garnets. You look at the Victor mine in Ontario, which produced extremely high quality diamonds. You look at the Grib pipe in Russia, didn't have any G10 garnets. So this got us investigating more into what are called G9 garnets. The G in G10 and G9 comes from John Gurney, who's passed away, but he did a tremendous amount of research, and he came up with a plot that separated along a line where you would find G9 garnets and G10 garnets. What we found in our research was that high chrome G9 garnets are equally as important as subcalcic G10 garnets because they are known to be inclusions in very large diamonds, very high quality diamonds. And our belief is that these kind of mineral chemistry comes from deeper in the upper mantle than where a lot of the G10 garnets come from. And in this higher pressure and higher temperature environment, the lower quality stones just aren't able to survive. That subsequently is sort of being proven out. And so it's a good idea to look at from what was considered conventional wisdom the first time around in the Slave Craton in the Northwest Territories of Canada. They were looking for a specific kind of indicator mineral. Whereas if you look at high chrome G10, G9, or even indicator minerals that fall on the right side of the G10, G9 line, if they're high in chrome, those are indicator minerals to pay attention to. And that is the Arbutus kimberlite that Arctic Star just recently reported their diamond indicator minerals from, has some of these unique diamond indicator minerals. What makes unique diamond indicator minerals so important is, in a lot of instances, what happens is that those unique chemical compositions of indicator minerals are almost as rare as diamonds themselves. And that tells you that you're probably in the right environment in the upper mantle or lower in the upper mantle to have big, high quality diamonds. And that is what the mineral chemistry is suggesting at their Arbutus and their Sequoia kimberlite, is that they have indicator minerals that are known to coexist either as inclusions in diamonds or attached to diamonds that are quite unique and are known to exist with big diamonds. And when it comes to mining diamonds, like anything else, you want to find these big stones because they can carry the value of mining the lower quality stones, and then you get these enriched high quality stones that makes a lot of profit. And that's what Lucara is seeing at their diamond mine in Botswana. And so I'm very excited about what the guys at Arctic Star Exploration are doing on their kimberlites right now. They've got caustic fusion, where you dissolve the kimberlite in a caustic solution that will then leave you with just the diamonds. And they've got that work being done on two kimberlites, Sequoia and Arbutus. And in fact, they probably are getting close to getting their results from Sequoia. So getting back to Sequoia, what really impressed me about that kimberlite is, from a small sample, there's this thing called a diamond distribution curve, and I don't want to get too diamond sciencey on you, but the population of certain stones give you an indication that as you do larger samples, you're going to find larger diamonds. And ultimately, when you do a large enough sample, you're probably going to result in a very high grade. And that's what the diamond distribution curve at Sequoia is suggesting from a small sample. Now, they've run some models that are kind of conservative and then a little less conservative, but I think that there's a high probability, based on my experience with diamond distribution curves, that suggests that even that more optimistic modeled diamond distribution curve could turn out to be conservative as well. And I see the direction of the curve, and combined with the diamond indicator minerals, that suggests to me that that grade could be significantly higher than even their less conservative diamond distribution curve. And so now they're awaiting the results from the Sequoia and the Arbutus kimberlites. I think Sequoia will come first, and then Arbutus. I'm very optimistic about what I'm hearing from the in the report that the guys at Arctic Star recently published. It was done by Chuck Fipke, the guy that started the whole diamond business in Canada. Chuck Fipke has one of the number one database for diamonds would be, and diamond indicator minerals would be De Beers, because they've been at it for many, many decades. But second in the world, and maybe it's a close between John Gurney's work in Africa and Chuck Fipke. So Chuck Fipke has a extensive data set to compare diamond indicator minerals to against and classify those stones. And the classification suggests to me that they're finding these unique diamond indicator minerals that come from deeper in the upper mantle, where you're going to be finding large and high quality stones comes from. So it's a bit challenging for investors. Investors like to look at grades, and you poke a hole in the ground and you get a half an ounce per ton of gold, a quarter ounce per ton of gold. People can understand that. Trying to follow the science through diamond indicator minerals, and then diamond distribution curves from small samples, and then diamond distribution curves from bigger samples. It takes time and it's not easy, but if you're right, which I think that these guys have a high potential of binding big, high quality diamonds, this company with a tiny market valuation could trade at many multiples of what they are now. And getting back to what I started with, I think that diamonds are the best contrary play in the mining sector. And there's just not a lot of companies to look at. So there's a very short supply, smaller supply of diamonds in strong demand. There's even smaller supply of companies that are involved in diamond exploration and development for investors to look at. And so I'm very happy that the guys at Arctic Star have decided to join my show sponsorship program, because this allows me to put out a lot of content about diamonds. For a long time, I was thinking that this information that I had in my head about diamonds might just stay in my head, but these guys at Arctic Star are seeing some things that have me quite excited. So you've got high diamond prices, all-time highs in diamond prices, and the supply and demand curve suggests that's going to keep on continuing. And they're really unaffected by man-made diamonds. There's an industry-wide lack of exploration, and that's been going on for well over a decade. There's just, as I said a few times now, there's just a lack of companies that are in the exploration, mine development, and mining of diamonds. And so that also points to no change to this decline in the supply of diamonds that have been happening for several years. And another thing that's happened in the diamond exploration and development business is we've kind of lost a generation or two of people that were active in the diamond exploration business in Canada. It's been so tough, and the companies have disappeared, and a lot of those smart geologists have now moved into gold and silver and other metals, basically because they need jobs. And they're very smart people. Some of the most successful people that I'm seeing out there in the metals sector formerly were involved in diamond exploration. And a lot of that has to do with how hard it is to find diamonds. You got to be very, very sharp in order to find diamonds. And so, and even kimberlites with diamonds in them is difficult. So these guys have all moved on. And so we've got a lost generation in the exploration business. And I can't see that that's going to change anytime soon. Even say, for example, that if Arctic Star were to turn into a massive winner, are those people that were formerly involved in diamond exploration going to get back into diamond exploration? It would mean that they would have to leave good paying jobs in order to go into something that they already got away from. So I think this lost generation issue is not going to change. Earlier, I talked about the importance of indicator minerals and diamond distribution curves. I think that is one of the keys how companies are going to find kimberlites in places that had already been looked at, and they were going to have to take a new look. And that's exactly what the guys at Arctic Star. It paid off handsomely for Lucara because John Armstrong looked at the diamond distribution curves. He looked at the mineral chemistry. He saw trends that suggested to him that they should find big stones there. And again, I bring it up because that's exactly what the guys at Arctic Star are doing. They're looking at this ground that had previously been explored with a new set of eyes, with a new look at diamond indicator minerals, and a new look at diamond distribution curves, and a new look at geophysics, and they're finding stuff. And I think that trend could continue in the Northwest Territories. I believe that there is potential diamond mines in the Northwest Territories that were probably walked over or walked away from, such as what's happened at the Diagrass property that the guys at Arctic Star are involved with. I think that maybe these guys are the first ones that are going to prove the importance of looking at things with a different set of eyes than what were looked at many years ago in the diamond exploration business. And I think that they've got the chance to make a very important discovery. I talked about the importance of G9 garnets with high chrome in them, not looking at high chrome garnets that plot on either on the left side or the right side of the G10, G9 line. These high chrome indicator minerals, garnets, come from deeper in the upper mantle where you find big diamonds with high quality big diamonds. That's why you got to look at that. Again, it's really good to see these guys at Arctic Star starting to look at projects that were looked at in the past and walked away from, and taking another stab at it. And I think that that's going to reward them. They have a very tiny valuation, as I mentioned earlier. And I think that valuation has the potential of doing some wonderful things for investors. Now, I've been looking around for diamond companies, and there's only really a handful of diamond companies out there that are actively exploring in Canada. And of all those that aren't major mining companies, such as De Beers or Rio Tinto, there's only a few small juniors. And of those few small juniors, I think that I'm most positive about what I'm seeing with Arctic Star. So I wanted to do this introductory video to let everybody know that I'm back in the diamond scene and I'm back reporting on diamonds. I like what I see from Arctic Star, and they've been kind enough to be a sponsor of my website. So I'm going to be doing interviews with them to discuss their news and their focus and why they're doing what they're doing. And so stay tuned for those. On that note, as always, my shows are for information purposes only. It's important for you to speak with your financial advisors before making any investment decisions, and do your homework. Go to their website. You're going to find a lot of good information on their corporate presentation. In there, they show you the estimates for diamond prices going forward, and how there's been a dramatic decrease in the supply of diamond from mining. And they got plenty of really good information in there. So go to their website, look at their corporate presentation, look at their news releases, and stay tuned, because I'm going to be talking a lot more about Arctic Star diamonds, Arctic Star exploration. I think that they've got the potential to take advantage of what I think is the best contrary play in the diamond sector, or in the mining sector, which is diamonds. I love diamonds. So have a great day, and we'll talk to you soon.